Hello everyone. It is Amber Carlton with Berkshire Hathaway HomeServices Premier Properties, and I am coming at you today with our Real Estate Basics, episode 26. Today what I want to talk to you about is some new financing options that are out there and available to you. There's some really neat new programs with things kind of easing a little bit. Lenders are now incentivized to have new creative options for home buyers out there, which is wonderful. So some of you are thinking, I'm living in an apartment, my rent just went up $300, I don't really know what to do. I've heard interest rates might come down in a couple years. I don't know if I should wait it out or where I'm at. I'm just going to present you with some great options that are available right now for you. And some of these I had never heard of before. That doesn't mean that maybe they weren't around a long time ago and came back, but they are here now. So one of the primary ones that I've been talking to my clients about, that I'm sure you've been hearing about on social media, or maybe from different colleagues or different people is the 2-1 buy down. So that is going to, I'm sure, vary. Everything tends to vary from lender to lender, but one of the lenders that I've met with on this exclusively, how it works for them is year one, you buy your rate down by 2%. So let's say right now interest rates are 6%, okay? Year one, which would be from the time you move in until a year from then, you get to buy that rate down 2%. So that would bring you down to 4% for your first year. Year two, it only gets bought down 1%, so that would bring you down to 5% for your second year. No matter what, you're locked in at that 6% for 30 years. So if we get to year three and everyone's predictions of rates trickling back down is completely wrong and it does nothing but go straight up from here, you still locked in a good rate then, right? If we end up 5 years from now and rates are 8 or 9% and you locked in a 4, 5, 6, you're still looking good, okay? So that gives you some option there. One key thing with this lender that I talked to in particular was that it's almost like a savings account that's sitting there for you, buying down the rate. So if you refinance, let's say everyone's right, and next year rates come down to 4.5%, and you can lock in that 4.5 versus the 6. The rest of that money that they were going to use to buy you down to 5% the following year is still there for you, and they're just going to take that off of whatever your remaining principal is on your mortgage. So you are not out anything by doing this. I think it's a super great program. I don't see why anyone wouldn't want to take advantage of it right now when we're not quite sure where those rates are going to end up. So consider that. I know First International has it. Mountain State Financial Group has it. Quite a few different lenders. I believe Benchmark has it too. Quite a few lenders are utilizing that program. It makes more sense than trying to buy the rate down for the whole 30 years. That's too expensive, and you're probably not going to be in the home for 30 years, so it's probably not advantageous. And or if interest rates come down, you're going to want to refi anyways. So that's where we're at with that. So if you are either in that rental, they're raising your rents, you're looking at buying a home, or if you are tight in your home and you want to do a step up, there's a million different reasons why you might want to buy a different home, right? If you're in that position where you think you want to buy a different home, look into the 2-1 buy down. If you're looking for a lender who can help you with that, hit me up. I'm more than happy to connect you with them. They are wonderful to work with. Another option you would have would be an ARM. I'm sure we've all heard about ARMs. It stands for Adjustable Rate Mortgage. What you won't have with an ARM is that security of a 30-year fixed at that certain percentage. What you would have is a lower rate, and most people aren't in their home, especially your first home, more than 5 to 10 years, somewhere in that realm. Usually it's a step up, right? So it really depends on how long you're planning on being in there, what your tolerance for risk is. There are guidelines and caps on what they can move that rate up once you cross the threshold. So there's 5-year ARM, 7-year ARM, 10-year ARM. And what that means is you're locked in at, let's say, 4%. until you hit 5 years. And then after that, it can adjust, but it can adjust more than like 1 percentage point usually per year going forward. And it can adjust up, it can also adjust down. So it's just a little more for someone who's not super conservative. If you're very, very conservative, that might not be as friendly of a program as the 2-1 buy down. Okay, what else do we have? There are new incentives for first-time buyers that we haven't had in our market before. There's some grant money available for first-time home buyers. Those are income restricted, so there are guidelines. You can't make over a certain dollar amount to qualify for them. However, if you do, you don't need to pay that money back at all. North Dakota has a really, really great program with the Bank of North Dakota and North Dakota Housing Finance Agency. They actually have several, but for the most part, theirs is forgiven 1/8 per year for 8 years. So if you sell it 3 years in, you get 3 years forgiven, and then the other, 2/3 of that amount is due back. It comes out of your proceeds, it's no big deal. However, if you qualify for this other one, free money is free money. Why not take advantage of that? And usually all of the first-time buyer programs will come at a higher interest rate. However, Bank of North Dakota, North Dakota Housing Finance Agency are more cautious. I don't even know if I want to use the word cautious. They're not as quick and as volatile to change the rates. So if the rates are going up and down and all over the board, which they had been a lot lately, I feel like that's finally started to ease, thank heavens. They're not going to just raise theirs up and down as quick as a normal mortgage company would. They're going to assess everything and make their raising and lowering accordingly. It usually takes more time. So if you time that right, you might actually still end up getting a better rate or close while taking advantage of those first-time buyer funds. So that is one more reason to be looking now. Let's see here. What else do I want to talk to you about? There's still the USDA programs in Minnesota and North Dakota. So if you're looking at something rural, Dilworth doesn't count. I'm not sure if Horace still does, but I doubt it will. Too close to the metropolis of Fargo Moorhead. Any other rural areas like Breckenridge, Wahpeton counts. Fergus Falls counts. Several of them count. You can get no down payment. The kicker with that is the appraisal work order flags are a little bit tougher. They follow not only VA's flags, but FHA's flags. So especially if you're trying to buy a farmstead, if there's any outbuildings, it will be a challenge to do. Not to say it's undoable. There would just be some additional complexities we would want to talk about if you're pursuing that. So yes, these are some great programs. There are a ton of different options out there right now too for veteran buyers. Benchmark's really great, Valley Mortgage and Mountain State Financial, I believe First International too. So many great banks for our veterans. So I can connect you with them too if you're a veteran looking to make a move. But yes, I would encourage you. My phone's already starting to ring. I know the buzz of national is all around on how everything is doom and gloom. That's not true to our market. We have very, very few homes for sale. Again, still currently, I will be back next week with my market update to tell you exactly what we've got for inventory left. But we have less than 3% vacancy rates for our rentals. We have a ton of people moving into our area. So with that being said, rents are going up. People are losing their garages, like real life phone calls that are happening right now. Because the property managers have goals that they want to accomplish and they have low vacancy rates. So this is when they're going to make those happen. It's very unfortunate for the people who are going through it. That is horrible. I get the business side of it too. It's a tough catch-22 right there. But yeah, I have a feeling once we get past the holidays, it's going to get busy again fast. So if you're in a position where you want to do something and you want to beat out not having like the fury of the multiple offers, this is 100% the time to do it. Give me a call. I would love to help you. If you have any other questions on lenders or different programs that might help you get into something, always happy to help. So put it in the comments below, DM me, shoot me a text, or give me a call, okay? I hope you guys have the best Christmas. Tune in next week if you can for the market update, and I will let you know what's happening as far as housing availability in our area. And yeah, if I don't get to catch you before then, Merry Christmas and Happy New Year. Take care, be safe and warm out there. It's so crazy. Bye.